Aswath, let's talk about this run on Tesla, because you've been a holder of it in the past, but sold at a lower price. Is that right?
I left a lot of money on the table. But I've always described Tesla as a story stock. What I mean by that is with Tesla, it's always the story that drives the price, not the news, not the fundamentals, which frustrates a lot of people. And there are two camps. One views Tesla as worth nothing. They think this is a gigantic scam. And the other thinks Tesla is the greatest company in the face of the earth. And you see the movements between the two extremes at different times in the stock. With Tesla, this too shall pass. There will be moments when the other side starts to win. But the wild swings are part of Tesla's history.
What do you think is driving the price, though, at the moment? And is there a risk that actually 12 months of trailing positive earnings, even a couple of years of that, start to put pressure on the stock price if it then becomes valued in a more normal way?
If you're trading Tesla based on expected earnings or cash flows, you're trading it for the wrong reasons. You trade Tesla based on mood and momentum. Tesla, I think, is benefiting from the fact that this virus has had a disproportionately negative effect on older companies, capital-intensive companies. In a sense, the virus has handicapped Tesla's competition. And that kind of explains why all the young electric car companies are doing a lot better than the established automobile companies. Lots of debt, huge capital intensity. And this virus has not been kind to those companies.
How do you think about the environment right now that we're in and the focus or maybe lack of focus on valuations with stocks like Tesla?
I think it's subsets. You can see this with Zoom as well, where people are focusing on winners. They want to make a lot of money quickly, and these winners are benefiting from that search for, let's find the stock that's going to double, triple. Now, the danger with that is you take a stock like Zoom, I think it's been pushed up way too much, notwithstanding the fact that it too shall benefit from the crisis. So I think what investors are doing is I think they're highlighting the right companies that are going to benefit from the crisis, but they're overbuying these stocks, pushing the price up too much.
What about the underperformers, whether that's the banks, the hotels, the energy companies, airlines, etc.? Is it also impossible to value them at the moment because we don't really know what the E is going to be in the next year or two?
It's not impossible to value them, but to value them, you've got to make a bet on the macro factors, the economy coming back. It's almost impossible to make a bet on the airlines or on any of these downtrodden stocks without also making a bet about the economy. And let's face it, on that front, we keep seesawing between feeling incredibly optimistic one week to incredibly pessimistic. So unless you have really strong views on the economic turnaround, I would not jump into those stocks much too fast. I think there's too much risk.
I don't know if the Dean of Valuation is allowed to call bubbles, but do you see any with the frothy behavior we're seeing in certain stocks? And it sounds like you don't agree with Tesla's valuation at all.
Now, I would not buy Tesla at 1,400 or 1,450 or wherever it's trading. It's like a moving target. But I would not call somebody who buys Tesla crazy, because the minute you use the word bubble, you're saying people who buy it are crazy. I don't think they're crazy. They're rational in their own way. It's not a rationality I buy into. I describe Tesla as an implausible story, but not an impossible story. There is a plausible story you can tell that'll get you to 1,500. It's not a story that I would buy into, that I want to bet on.